All right. Have you ever looked at a crypto forecast and just felt completely lost, like you're getting totally mixed signals? Well, today we're going to unpack that exact feeling. We're using one specific coin, Origin LGNS, as our guide to see how different data points can paint two completely opposite pictures of the future, and more importantly, what that actually means for anyone trying to navigate this space.
So let's just dive right in with the big question, right? The one that's on every single investor's mind. Where is this thing actually headed?
As of today, March 31st, 2026, this is where we're at, $4.92. But that's just our starting point. The real story, the puzzle we're here to solve, starts when we look at where the experts and the algorithms think it's going next.
And here it is. This is the big contradiction. On one hand, some data is predicting a pretty significant 25% drop in just the next month. But then you look at another model and it's forecasting a mind-blowing over 2,000% rise in the long run. So how on earth can both of these be true?
Okay, to figure this out, we've got to look at both sides of the coin, literally. Let's start with the immediate future. Let's dig into the case for the bears. Why are so many indicators flashing red right now?
Well, first up, we have the Crypto Fear and Greed Index. It's basically a thermometer for market emotion. And right now, it's sitting at an 11. That puts us deep in the extreme fear zone. The overall feeling in the market is just really pessimistic.
And you can see how that fear translates directly into the technical signals that traders are looking at. A huge 77% of these indicators are pointing towards a bearish or negative outlook. That is pretty overwhelming.
And wow, this table really drives the point home. What you're looking at are simple moving averages, or SMAs, a super common tool for spotting trends. And across every single time frame, from the super short-term 3-day average to the long-term 200-day, the signal is unanimous. It's a chorus of sell.
But wait, just when things look their absolute worst, the data tells a completely different story if we just zoom out a bit. So let's flip the script and look at the bull case. So, despite all that short-term doom and gloom, some projection models are predicting a future price of over $120. I mean, that is a massive jump from where we are today. And it's not just algorithms spitting out these wild numbers. There's a real-world event, what investors call fundamental news, that actually backs up a much more optimistic view of this project's long-term health.
And this is it. The project, which also goes by the name Awake, just raised a cool $100 million in its initial liquidity offering. Now that is a powerful sign of investor confidence. It gives the project a huge war chest for future development.
Okay, so here's the billion-dollar question, or I guess the $100 million question. How can a project with that much funding and a sky-high long-term forecast have every single short-term indicator screaming sell? It's time to decode this data.
So first, you've got those moving averages we saw before. The easiest way to think of these is as trend spotters. They look at where the price has been to tell you the general direction it's heading. They're all about the big picture, the overall trend. But then, you've got a totally different kind of tool called oscillators. These guys are momentum watchers. They care less about the overall trend and more about the speed and strength of recent price changes. They're built to tell you if the price has been pushed too far, too fast, and might be overbought or oversold and due for a reversal. And right here, this is the aha moment. This is how both things can be true. The moving averages are looking at the recent downward trend, and they're correctly saying, hey, the price is going down, so sell. But the oscillators, they're looking at the momentum of that same drop and saying, whoa, that price fell way too far or way too fast. It's officially oversold. And to them, that's a buy signal. So you see, they're not actually contradicting each other. They're just measuring two completely different things.
So what does this all mean for you? For someone who's just trying to make sense of the market, what's the real lesson here when the data seems to be fighting itself?
It means you're almost never looking at just one simple story. For Origin LGNS, right now there are 3 different narratives happening at once. The trend story is negative. The momentum story is actually positive. And the fundamental business story is very positive. And this is exactly why you'll see a disclaimer like this on pretty much every financial data site out there. Because at the end of the day, predictions are not a crystal ball. They're just estimates based on very specific sets of data and assumptions.
So the real takeaway isn't about figuring out which prediction is right and which one is wrong. It's about understanding that these are all just different tools for different jobs, right? A hammer and a screwdriver are both tools, but you're not going to use one to do the other's job. It's the exact same idea with market indicators.
So we'll leave you with this final thought. Instead of asking which story you should believe, maybe the smarter question to ask is this: what do these contradictions tell us about the complexity of the market itself and about the real limits of trying to predict the future? Thanks for digging into this with us.